Hello everyone, Ippolito here. Let's get right to the day and then for the future of the week, future like it's a long time, we saw today Apple continue to get hit. So we're down about 15 from the highs here in Apple. Oh no, bear market, run, run, run. Usually when something like this happens, it will punish the people who sold, and people will be dying to get back in, and we have earnings which could be the catalyst for the event. Now, if we really look at Apple, all we did was come back into an area of value where there's been price discovery before. This move here and this move here, we just filled it, there was air, and we're just pulling back here. I think if earnings are good, we take out 180, and today never happened, Tuesday. Earnings are bad, maybe 155 or so, even 160. I don't think a lot of pain ahead. So what a lot of people don't realize today is, let's just look at the Qs, or actually the big names. Microsoft down 1%, Google down 0.5%, Amazon up $15. This is not run, panic. I spoke about this on the members video. VXN, the NASDAQ Volatility Index, is up $1 or 5.25%. That's nothing. It's going to be up anyways because of big tech earnings this week. The whole thing is not to look at the short term, which is today. We have a big catalyst this week, which are big tech earnings. So I'm playing it via XLK calls, to get Google, Facebook, Apple, and Microsoft earnings, because I think they go higher. Therefore, those are the major components of XLK. But the main thing I want everyone to realize is keep an eye on the market internals, the ticks. Positive 800 tick, bullish. Negative 800 tick, bearish. We've actually had some positive 800 ticks. We've had some negative 800 ticks. If this was forced liquidation selling, we'd be slamming negative 800 to negative 1,000 tick nonstop all day, which we haven't seen. We've hit negative 800 tick. Yeah, a few times. We're not just staying down there all day. Another thing to look at is the advanced decline line, or the ADD line. Doesn't actually look too bad. Yes, it's remaining negative, but you can see here we're actually trending up as the market goes up. It's not continuously going down. And the following thing is the TRIN index. We were getting a little light in the TRIN. What I mean by that is, let's go to 15-minute. We had Friday a 0.4 tick. Usually anything around 0.6 is too low. So we hit 0.6, we hit below 0.6, 0.6, and then we got up to nearly 2. Once the trend gets to 2 or higher, it cannot sustain that level for long, just like it cannot sustain below 0.6. And once the trend starts going down, that's inverse to the US stock market or the S&P. We have the S&P starting to go up. So trend coming down is bullish for the S&P. Another thing to keep an eye on. I'm just not worried. It's the end of the month, so you're going to have profit-taking manipulation. Big tech reports Wednesday after the close on Thursday, so you'll have new money coming in the market Thursday. And I'm assuming, which I hate to assume, but a lot of people are going to be like, wow, the stock market's doing so good. Fund manager XYZ, why aren't we in Apple, Facebook, Google, your big stocks? Therefore, a new wave of money comes in the 1st of February. Just what I see. I hope it helps. I try to make sense of it. The goal, I've been light. I haven't been initiating a lot of new positions. I haven't been trying to get cute because, the market ran up so much this month. Had a fantastic month. And to see a couple days of waffling around, that's totally fine. You have to understand that's acceptable. And don't try to call market tops or bottoms. Just try, when the market's trending, trade it. When it's not, just sit on the sideline. Go for a walk, enjoy the day, and wait for Wednesday afternoon, Thursday. If you want to start trading, those are the days to where you'll have the market moving with big tech earnings.